The YouTube stream. Let's see it work. Okay, it's 8 o'clock on Friday, the 1st of September. Welcome to a new month and welcome to this hour's webinar. At the end of this week, we've got non-farm payrolls. We've also got the Labor Day holiday coming up, so we will talk about all of that. First of all, let us do some disclaimers as always. All Bookmap Limited materials, information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And there's the usual slide about me, but I think we'll just go straight onto the screens today. So since we've got some major volatility and major news likely to happen in 29 minutes, let's just do a quick zoom out before we go into context. This is part of the context, but this is what we always do when we first fire up Bookmap in this webinar. So we are looking in ES and we're having a look where that resting liquidity is, and as you can see, most, if not all of it, or I'd say most of it, is up above. So, and if we look across at these two trading view charts, you'll see 3 a.m. being the London Open, and since then, since we broke above VWAP and then above value in ES, we have not gone back into developing value. And just to recap, the dark shaded area is one standard deviation of VWAP, and that's something that I consider as developing value, i.e. a proxy for what value is in the session so far today. And you can see that ES has not gone back into value, it's above value, and it's quite bullish, and the liquidity is aligned with that. In other words, one argument is that the liquidity is dragging it higher because people believe that they can conduct transactions up there. Anyway, let's have a look at context. Let's go back to, let's have a look. Yeah, all we are going to do today is we're going to talk context, talk about capital preservation, which is our number one job. And I've touched on it. I touch on it in every webinar, but I thought I'd dwell a little bit more and go into a bit more detail in relation to the setups that have happened today, and basically how one might trade in ETH any day of the week. Then we can watch the markets, maybe the ES, because the NQ will be absolutely nuts. We can watch the ES at the 8:30 release. Okay, so let's switch over to some slides. Okay, I will just double check. Oh, hi Tom. That anybody who has any questions or would like to discuss anything or like me to discuss anything, feel free to make any comments in the YouTube chat or in the Discord channel, my Moby ETH Futures Discord channel within the Bookmap Discord. Okay, the first thing on the images today is obviously the economic calendar, so the Forex Factory one. It's as good as any. We can see quite clearly here we have a major red event being the non-farm employment change, i.e. the non-farm payrolls. That is at 8:30 Eastern, which is in 27 minutes. We're expecting high levels of volatility with that release every single month, and that may also result in the margins given to you by your brokers being adjusted, so an increased margin requirement during the high level of volatility. We've also got one other red economic release, which is the ISM manufacturing PMI at 10 a.m. Eastern, which is well past our 1 hour of power, but it is something worth noting. So basically, to recap the calendar, we've got a lot of volatility, so we've got some market making moves. One thing that can happen with a market making move is that they can result in trend days. Again, whenever I say anything like that, and I'm talking about probability and statistics, The onus is on you for your trading business to go and research and explore any idea that I may have raised that piques your interest. So if I say that if you have significant market making news and then the market opens out of range, and out of range means it is out of the range between yesterday's high and low, there is a potential to continue a trend for the entire day. There's some very good software packages out there. Investor RT is one where you can research that to your heart's content. And of course, my friend Python that I mentioned the other day. Python, you can do just about anything provided you can export your data to it. Okay, on top of those economic releases, we have a US holiday. That's Monday Monday coming up, Monday the 4th, Labor Day. And there is another statistic, again, please explore this for yourself, that the market tends not to have a significant down day going into a holiday weekend. This is not a huge probability. We're not talking about 90%. We're just talking about a likelihood, more likely than not, that it will not have a significant down day today. Anyway, let us move on to more context. Okay, some stats. The only reason I'm pulling this up right now is to note that on NQ especially, we have had nowhere near the average range for ETH. That's currently, when I took this a few minutes ago, a 77-point range out of an average of 120 over the last 10 trading days. That means there's plenty of room left, and if the average for the whole session is 237, NQ has got a long way to go, and ES has more than double, and especially with market making news. In other words, we could have a lot more range than we currently have had in ETH. The relative volume is 88, which is under 100, but we haven't had that news yet, so something I'm expecting is that relative volume to shoot upwards come 8:30 a.m. Eastern. Okay, let's have a very quick look at the dailies for ES and NQ. As I mentioned on Wednesday, the potential downtrend, or the downtrend, depending on which way you look at it, has been broken, and we have re-established an uptrend on these trend lines. So we've got two trend lines, a medium term and a longer term, which is multi-months for ES, and if we switch over to NQ, it's the same, but a bit of a steeper trend line for NQ. And so basically it is relatively bullish, no matter any other news, etc., for ES and NQ, and NQ has been leading or driving. So if we look at the bars, the daily bars this week, so after that big red bar down and the big blue bar up, and we go back to ES, we can see that, yeah, it was significantly bigger in relationship or proportional terms in NQ than it was in ES. And if you watch the intraday stocks, you'll have seen that it was likely that NQ was leading in RTH, and I would say that has also been the case in ETH. But the caveat there, let me get rid of these slides now. We'll go back to streaming, and we'll go back to the markets. In ETH, we have the benefit of liquidity providing a stronger foundation for magnetism, i.e., it is more likely, based on liquidity, to establish a direction in the ETH than it is in RTH. That is my personal opinion, it's my personal statistic, and again, please research that for yourself. What I was saying was that although NQ has been leading, if we look at the liquidity picture here in ES and we zoom right out, we can see most of, or nearly all of, the liquidity is above. We're very close to tapping into that now, and we have started tapping into it, and we've been grinding up quite a long way in towards it and into it all afternoon European time, or all early morning US time. And if you contrast that with the liquidity picture in NQ, we zoom back out. We have to zoom in on the horizontal and the vertical axes. the liquidity picture, there was earlier on some fairly thick resting liquidity here at 15,670. That's been tagged and taken, and it was quite a useful level on the couple of times it got revisited. But other than that, 15,670 and maybe this 15,570 and 15,585, maybe this 15,585 level as well. The picture on liquidity in terms of giving a directional read was a lot clearer and a lot cleaner in ES, and that is often the case, but not always. So just because ES may have led for 3 days out of 5, for example, does not mean that tomorrow or the next day the NQ will not provide the better liquidity read for the European or Asian sessions. Okay, how are we going on time? We've got 20 minutes. Okay, just checking to see if there's any questions. No questions so far. Okay, so what am I going to do? I'm going to talk about. We're going to do this directly in Bookmap. We're going to relate the subject of risk back to win rate because we all have weaknesses, and I'd say that over the course of my trading career, an obsession or too strong an interest, too keen an interest in win percentage rate has held me back. And I'm quite careful in using the term held me back because it is quite true, and it's probably the best way to describe it. So what I'm trying to say is that if you can get away from two concepts, and they both relate to each other, one, the desire to win, and sometimes the desire to win at all costs, and two, the desire to have certainty, which is very, very strongly interrelated, that will help your trading enormously. And it is essentially a casino. You're playing it the same way that the casino is playing you, and your edge depends upon how you handle your risk preservation. Right, I'm just watching. Let's go back to ES because it's hard to take our eyes off this and go back to the London Open because we're setting up for something coming into 8:30. So we've got some strong liquidity bands here that it wants to eat through, it appears. If we have a quick look at the profile and we zoom right into this, yeah, it does not look finished in the sense that there is not a nice tapering off on the profile as it currently stands going into a major economic release. So it is hard to suggest that we will go straight down from here without at least exploring a little bit higher than the current ETH high of about 54, 453, 450. I know I have my numbers very, very small, so it's interesting to note. So going into this release, again, this is context, so this all links up to the context we were talking about before. We've got value in ETH, which is, I can draw, but I'll draw with my mouse for a second. You've got value in ETH, which is essentially this area here, so that the value is tapering off at this singles area, profile single at about 4523. So if we had clear resting liquidity above that stayed there and we did have a liquidity break, and I can explain what that is, that is essentially just a dip down to grab some more liquidity, i.e. a dip down to an area where they can be filled to go back up again. If there was a liquidity dip down to here, that might become a very attractive trade to trade back to any resting liquidity in this area that might be in a position for them to attempt to take out yesterday's RTH high. And if I look also, let me get back on the cursor. If I look on this, I can do this in Bookmap as well, just at the heavy liquidity that's up there at 4545, and if I go up and I zoom right back in on the profile and have a look to see if there are any other areas recently that they might want to take out. I mean, there's a potential there that is something called a poor high. It doesn't look really like a poor high. but there is a possibility that it might want to get up as high as that, which is up at the 4560 level. So it's always worth looking in Bookmap once you've seen this kind of profile interest points to go and have a look at liquidity. So let me just ditch that bit of drawing. Let's go back into Bookmap and see what is above. And I'm just dragging this down so I don't have to zoom in and out too much, so I can get a better idea of the numbers. So you've got 254 at 4545. Sorry, I'll say it again, 4545. Then you've got another 200 plus level at 4551, and up at the 4560 level, nothing of the 200 order. So it's interesting that the highest tag is up at this 4560, and I will just mark that, and it should appear on Bookmap if I just mark it. Bear with me, I'm just going to mark that level because it could well get that high during the release, so that may or may not appear in Bookmap in a few seconds, depending on how often CloudNotes is refreshed. I've got a little tool that I built in Sierra that where I don't always write in it. I normally just shade colors. I've got 4 colors, and once I mark an area on my execution chart in Sierra, normally within 60 seconds, you get there it is there. You get the corresponding cloud note, and so if I actually gave that one a name, that would also appear just there. But it's just something useful if you've got multiple tools, and I've said before that I do, or I admit that I do. It's always a good idea to make sure that they talk to each other or work as well with each other as they possibly can. So I know Tom, who was listening a little bit earlier, uses Investor RT, but yeah, he has a process where he's integrated his use of Investor RT directly with his use of Bookmap, and that is key. So you don't want your tools to be conflicting with each other, or to spend too much time focused on one tool and then ignoring the other tool, because that negates the purpose of having both of those tools. Okay, so on this screen here, we've got a purpose of this trading view tool. We've got a higher level 3-minute chart, which will move down to 1 minute in a few minutes, and we've got the developing value area, and we've also got a clearer zoomed out picture of yesterday's high, low, and settlement. So it serves a purpose. I've got other things in my Sierra chart that serve as purpose to work with Bookmap. So it looks like they are having a bit of a liquidity dip. NQ might be a little bit more interesting on this one. I marked a little area here of on a very low time frame chart, a 10-second chart, that they might want to flush this zone down at 15.565. Just to see if there were any stops down there on any liquidity break. This does not mean that we are suddenly not bullish. It's just the immediate short-term action may be that they flush the stops around here to get a better price to take them up higher later. That's one possibility, but there are lots and lots of other possibilities as well. Anyway, let's have a 5-minute chat about risk and capital preservation and win rate. So I might just kick this one off by talking about win rate. Okay, and I might do a little bit of a drawing here as well. So if I just do some typing first here. So when I was learning Wyckoff, one of the first setups that I was told was about was something called new momentum high or low. And if I now get my pen out and we draw this one, and there's a reason why I'm mentioning it, if you bear with me. So if we let's do it to the downside. Okay, so say we've got some price action here, and then all of a sudden we go down there. Okay, that would be considered a new momentum low. And you often have something like a momentum indicator, such as a MACD or any type of momentum oscillator, where you might have just a general thing like that, and then suddenly a much lower curve or lower peak on the momentum indicator as well. Okay, why am I mentioning this? Because it's not something that we generally talk about. Sorry, I'll get rid of that as well. Okay, I was told, yeah, I was taught, we went, it doesn't matter who I was taught by, that this particular setup has a 70-80% win rate. Okay, I was also taught some scalping techniques. So a particular scalp, a very small scalp, a small scalping technique, small setup that had something like a 90% win rate. What I'm trying to say is that both of those lessons in hindsight, and we're talking about several years ago and just reviewing it all now, were a disaster for my psyche and moving forward to establish a profitable trading business. And it's something that I highly encourage, suggest, whatever the words are, people not to go down that path. You will see, if you do your YouTube kind of search, your Google search, you'll see these gurus. Oh, by the way, if we quickly click back to NQ, we did flush that there, and they haven't really found many stops. That was the zone I'd marked earlier that I thought they would flush. And let me just move this chart down to 1 second. It was really some of the action down here that I thought they were going to flush and maybe go all the way back into value. They didn't really. They just tagged value, and looks like they bounced already. Anyway, yeah, let's get back to that. Okay, what I want people to get away from in terms of this 90% or 80% win rate is that this gets into your head, or it starts playing with a part of the human brain that loves certainty. And the human brain is naturally inclined to do that for whatever reason. We don't need to go into the whole psychology of monkey brains, etc. here during this, because there's plenty of better books and speakers and videos all about that kind of concept. But what I'm saying from a practical perspective, and what this does when you're actually trying to trade these markets, when you're not doing this from a theoretical basis, you're actually in the nitty-gritty, executing and placing orders and placing stops, or supposedly placing stops in the market, is that it gets into your idea that this has an 80 or 90% win rate. This must win. If I let it lose, then I'm not going to get the win rate, or this can't lose because I've taken this and I've lost twice in the last 5 trades, and this has got an 80% win rate. So this one must win to get there, or there's some other factors that lead you to believe that it is absolutely certain that this trade will win. That will kill your trading, and that will break your account quicker than anything else in the market. And it also it has 2 ways. Let me do it as a separate bullet point here. 2 ways of destroying your account. Excuse my typing today. By adopting this approach. The first is certainty. So you won't take your stops, and one single trade will get you to breaking your account or your max stop limit set by your broker. All right, so that one trade, because you're so hooked into this, I must win 80% of the time, 90%, 100% of the time, that you will not take a stop. And that one trade, it doesn't matter. I mean, you might well have been hitting 80% on this particular setup time and time again, but that one time will destroy your account. Because you won't accept the stop. You'll have placed your stop in the market, just like you tell yourself to do, but you won't honor your stop. And that is a practical way of destroying your account. And the other way, the second way, is that you will not honor your win scales per your plan. So what I mean by that, and we can get back onto Bookmap now, because we can actually look at that, for example. So I'm saying, I'm going to draw again, so forgive me when I draw. Here we go. So I'm saying that if I zoom right back in, I have to zoom back in, otherwise you won't see why this is a supply and demand trade. Okay, so we have a low here, we have a flush below it, and we have a breakout failure. So this is type C. So, it's really horrible. Let me just go back. So this is type C. Okay, type C, right? So we've got a breakout failure below. It rejects that and goes up. Okay. When we have a type C, and we may need to zoom out again here, we have a likely target here because we've got a lovely little range of sellers here that they should take out. Oh, I haven't got my pen on. Okay. They should take out, come on pen. Yeah, they should take out that. So I'm saying that the T1 was around here. And if you get into your certainty and this starts playing with your head, apologies, it zoomed in on me there, you will end up taking some off around here, here, and here. You might only have 3 scales, and you'd already be done here, even though when you've analyzed this setup and you've written it up in your trading plan and you know that your first main target is right here, you would not have taken your first scale there. In other words, you would have taken a scale at something like 0.25 R, multiple of a quarter of an R or half an R or 2/3 of an R rather than a full R. And we're talking about a beautiful trade here. So where did it get down to? It got down to 15.5, sorry, 15.363. So you could have had a really tight stop here, based on this low and this trade of 81, and you could well have had 3R by now. Or at least 2R. I'm just saying that will kill your trading because you will not honor your scales correctly at 1R, 2R, or maybe your second scale is at 1.5R, whatever your scales are that you've written in your plan because you've determined it on your manual back testing. That concept of not honoring risk preservation correctly and being too focused on certainty will destroy it. Anyway, I better stop talking about that now and let us focus on the ES market because we are coming right up to 8:30. So some of this liquidity is going to disappear. We're at 8:28. I'm just going to turn on financial juice. I don't think you'll be able to hear it. Okay, I'm just looking at seeing what liquidity is left in ES in the last 90 seconds coming into this release. So we still have this heavy band up to that round number at 4550, but we've also got a thicker band now that's appeared at 4560. We're still in ES, if we zoom out, we're still above value, and in NQ we're still above value. So part of these shades for me are to keep me in context. For example, not to let myself get too bearish. So I can still take shorts, but not to get too bearish in context-wise.
1 minute remaining. I'll be leading with US non-farm payrolls.
I don't think anybody heard that. That was financial just telling me that we're down to the last 50 seconds. Anyway, I'm just saying we are towards the top of the range. We're above value. We've got some liquidity above, so let us watch what happens. So one of the things that might happen is a fake out to start with, a liquidity dip down and then a grind up. or a rapid push up, but we shall see which way they go first, and we'll focus on ES. 25 seconds to go. Just zoom out so we can see all the numbers. It's about as close as I can get.
10 seconds.
And that's 8:30, so we had a move both up and down at virtually the same time.
187k, 187k, higher than forecast 170k. Unemployment rate 3.8%, 3.8%. That's higher than the forecast of 3.5%. Average earnings year over year at 4.
So the unemployment rate is higher than forecast. So
NQ by 90 stop.
doesn't really matter what the news was. The market wanted to go up and has continued to go up. And we saw that by the likelihood given by the liquidity positioning that has been there all afternoon European time or all early morning US time. So what was a little disappointing was that the dip down in ES was so small. So if I had been trading, I think I pretty much hinted that I was looking for longs. Yeah, it would have been a very, very quick trying to get in on this little stop out, 280 stops on the MBO stops to get in, to get along to grind up towards the 4550. There is a tiny sell iceberg that suddenly appeared at 4544. And if we quick as we can, we flick into NQ and there's some liquidity up above. And let's get back to ES. Center it. So I keep saying that I take these icebergs, certainly at this time of the day, as a potential sell target. I prefer it if it was more than just one contract that had been filled, but because you've got liquidity above, it does add confluence nonetheless to a long direction. But remember, markets do not like being too obvious, certainly the NQ doesn't. At the moment, it is obvious that it wants to go up. If we look across at the 1 minute chart on ES and NQ, we can see we've taken out the high of yesterday on both. And up we go, and we've now just tapped the first bit of liquidity that we're seeing there at 4545. So again, that liquidity did help us. And in terms of what was the supply and demand way of getting in there? I mean, we had this little region, you can call that a double bottom, or you can call that a test of a demand zone. You would have had to been very, very quick, but you did get that opportunity a minute after the economic release. So if you'd have managed to get in around there at market, and I would not have been limiting in, targeting at least the first liquidity, you'd have got a few points, probably about 4 points at least. And now we've got that liquidity, we are having a little push down. Again, given where we are, nothing is particularly bearish just yet. And at this point, when we have moved down a bit, it's worth knowing, it's worth checking to see if we've got any liquidity markers like this one here of any real interest. I.e., where is the liquidity below? What is it? Does it relate to any significant level? I mean, at the moment, NQ just tagged its high of yesterday and essentially has bounced off. The fact that it may have gone 5 or 10 points under at this time of the day, that's still just tagging it, because nothing is precise when you have significant market making moves. ES actually took out its yesterday high by a little bit. I came back down to the second deviation of VWAP, but we're not getting far away from that liquidity. So it appears that all this was a little motion to go and grab some cheaper prices, and now we're grinding back upwards to the main areas of liquidity. So it's still long. You can see, if we zoom in a little bit there, can see a nice little buy ice. So our general principle for heavy liquidity is they almost get there, they go away, they come back, they may not tag it the second time, but the third or fourth time they usually do interact with that heavy liquidity. Certainly that is the case more for NQ than anything else, but it will be interesting to see if ES blasts through this liquidity at 4545 this time. If anybody's got any questions, it's always good. I want to stay focusing on this action because we've got some market moving action right here and now, so we can have some live commentary for a change, as opposed to when I'm doing some hindsight talking on the microstructure before. I can keep talking about risk even though I'm talking about it on live market action, and I'm talking about it on ES rather than NQ. ES I find deciding where my risk point or my wrong point is to be easier than NQ, because ES is so much thicker than NQ. So I'm happy to have a stop. I mean, for example, if there was something there at this MBO 46 stop, I would have my stop right there. Because if it took that out, even though it could be a C category demand, I'm happy enough that when I initially take the trade, and I probably wouldn't have got into about there, that is a good enough stop for me. Whereas NQ, I find because it is such a thin, volatile beast, I often prefer to have automated volatility-based stops rather than manual stops. So most of the time, because NQ is so thin and so fast, my stops are placed automatically, essentially based on some form of multiple of an ATR on a low time frame chart. It's hard to describe exactly what I programmed, but that's essentially what it does. And I can quickly adjust the multiple that I'm applying to that type of ATR. So that's one way I do it. And obviously, if I can see a better risk point, i.e. I can see something to narrow the risk after I've entered the trade, I am more than happy to tighten my stop straight away. One thing that I continue to try and learn every single day is to be better at losing and to be better at being wrong. People will ask during this webinar, with the A, B, C of supply and demand, still crunching through the liquidity. So if we look at this, if we look at that, so look at the number of times it did it. So once, twice, didn't take it out, 3, 4. This time it took it out on the 5th touch. And then that's by zooming in into Bookmap and seeing all of these trades. You wouldn't see that on a 3-minute chart or a 15-minute chart, but it is good to note in Bookmap. And one of the things that helps you with, and this is we're talking about supply demand here, is that if you wanted a demand long, whether it's a scalp or whatever, say you wanted a trade to take out that 4545, the fact that the probability is that it will not take it out on the second touch, but more likely on the third and fourth touch, means that you are patient enough to wait for it to come back to here, take a tight stop, and trade all the way back into it or through in this case before it's come down and taken out the resting buy iceberg. I think that's one. I mean, I've talked about the advantages. I mean, there are lots of disadvantages of having small time frames, but there are also lots of advantages, and some of those relate directly to repetitions and risk and preservation of capital. So by zooming right inside Bookmap there, we are able to see exactly where that demand zone was, or exactly again is an inverted comma kind of word, as precisely where the risk zone, not the actual risk level, but the risk zone, because there's no such thing as an individual price level. You can see as close to precisely where that risk zone was than if you'd had it zoomed out on a much wider time frame. Okay, so this is quite nice action now that in terms of supply and demand, you've actually got, you could have had a lovely short there. I mean, that would have been a very brave person to take it with the liquidity above. Maybe it's the wrong thing to do if you think it's going to eventually grind up and take out the 50 and the 55 and maybe the 60. But there was a category C supply trade just right there after it flushed out that liquidity, some trapped longs, just some late longs, which is always the fuel to take these shorts, and then you would have got nice trade back down to the other end of that supply demand zone. Okay. So it's quite interesting now that we've had 10 minutes since the economic release, and we've had nothing majorly bearish in terms of market price action. And that is worth noting because there is another statistic that I'm going to throw at you, and again, take them with a massive pinch of salt and go and do your own research. But there is another statistic, which is that if we were to have a trend day, it might well be a trend day up in this scenario. If it was a trend day up, just as an example, then the low of that trend day up is often formed within 15 minutes of the economic release, i.e. by 8:45 a.m. Eastern. If we were having a trend day up, you might have already had the low of the next 8-9 hours. I am not here to predict the future. I cannot predict the future. Anybody that says that they have a certain way or an absolutely certain way of winning is lying to you. Anybody that says that they do tremendously well because they win 99% of their trades is lying to you. But I'm just saying that there is a statistic that if we were to have a trend day, then the high or low of that day is often established within the first 15 minutes of the major 8:30 a.m. economic release. And then if we then go back and see what was that point there, and we can always mark it on our charts as that, in case this is broken later. So this becomes a key point. So the point there is it's 452875, or if I zoom into the dot, 452875. So if I marked my charts there as a support zone, dragged it back, I'm doing this in Sierra, so it'll appear in Bookmap. Hopefully in a minute or so, something magical will appear just around about there, and I'll know there it is there, and I'll know that that statistic has been breached as when that's taken out. So I can then have a thought and say, maybe this, for example, might not be a trend day. No, it's always useful having counter arguments against yourself. So this isn't questioning your trading plan. This is not questioning the setups and the process that you take. This is just questioning your analysis of the market. Because, as I said in the last webinar, your trading process is a much better trade than you are. So anything that makes you question yourself rather than your process is a good thing. So if you question yourself because you're 100% certain that the market is going to go up and we're going to have a trend day, well, it's good that you have then questioned yourself. And here we have an objective level at 452875 where we have to then question ourselves if we were using that statistic, saying, oh, but I decided that the low for the day was this point at 8:31 a.m. at 452875, and it's taken it out. So maybe it's not a trend day. Okay, that was just a thought. So the market has slowed down. We've gone back to the normal kind of auctioning process. Tom likes to use that phrase again. So I'm having a quick look at, get that one off, having a quick look at the 1 minute bars. I need to have a quick look at my Sierra chart as well. So we're back under yesterday's Globex high and close to yesterday's RTH high. Yesterday's RTH high was at 39.75, so we're getting quite close to that. And it'll be interesting to see whether we can hold at this level and then grind upwards, or whether we're going to slam down through it and go exploring lower. Again, if we look at the microstructure in terms of what has happened since we formed that high, okay. So the second opportunity after we had that first high down, let's have a look. make sure I'm talking about the right thing. Might have to zoom back out. Yep. Okay, so you had that, which is the up thrust or the breakout failure. Then you had a double top, which is right where they placed 104
NQ by
liquidity.
55 stop.
And now it looks like they are having a short-term exploration of price lower, and we're at a critical level because we're right at the top of yesterday's RTH range, and if we get back under that, maybe we can explore a little bit further. I'm just having a quick look to see whether the liquidity has remained relatively static, i.e. they're still providing it up above or not, and whether they have signaled whether there's anything below. You know, is there some real interest that they want to explore and trade down to, or is this just more likely than not some form of pullback? Okay, and yeah, with major economic releases, because NQ is so crazy, if I'm looking for supply and demand trades, I'm looking for small trades in ES normally. Sometimes you get a scale and you get a runner. So what you start off with as a small trade might turn out to be a much better or bigger trade than you imagine. But I think I did a chart yesterday in the room just showing how many supply and demand setups there were in NQ in the first 90 minutes or first 2 hours of the European session yesterday. And again here, I mean, even if we started looking at shorts, you know, we've got that one, we've got two. And then if you zoom into this microstructure here, you've got a potential third one there. So you'd had three really good setups. And you know, we can go into details of why they are. I think the first one, yeah, the first one, it was the late players in terms of the trigger. You had the late buyers after the flush through liquidity, so you had a decent delta above and a decent number of buyers who in fact, we better zoom right in so you can't actually see it until we zoom right in. You had enough buyers to get us down to this buy iceberg, which is the other side of the supply demand zone as a target. So you had a good trigger there. You also got this market pulse where it's been pushing really, really, really hard with price, and so you know there's a good chance that they can't keep that pressure up forever. So, so that's a way of using the market pulse when it's grinding, grinding, grinding at the up. You know that you're taking it when it is right in the green zone and that it cannot probably stay in the green zone forever. And the second one's it's not a double top. If we zoom right in, but it's a test of the double top. So it's the category B or close to the category B as possible. You've got a nice large trade interacting with liquidity. So you've got a 400 trade, and that essentially is the trigger. This is the hardest one to take because you see when it's a double top and you've got liquidity above, it's very, very hard to think that it will not go all the way up. But you know, one of those things, if you get yourselves away from certainty and you get yourself into the concept of uncertainty and in exploring it and accepting that uncertainty can actually help and improve your trading, that will help you take these kinds of trades, which can get you, you know, maybe the best result of your trading day. You know, that would have been a very, very hard trade to take, that one at the 370 buy volume. But on the delta side, you've got a great big buy delta at the top there, and you're right in a zone where they did have supply previously and they pushed it down quite a few points. So you know that is a legitimate setup. The fact that it tests again and doesn't go up just enhances that or gives you a second opportunity to get in. All right. And then if you're staying on the short side, then this, we're zooming right in on the microstructure where it's exploring towards this resting liquidity below, and you're taking a short scalp. That is a supply-demand scalp there or there. That's a category B, that's a category C. And yeah, they do take it out and they push it down a little bit further. So I'm just saying that, with these economic releases and with highly volatile ES action at this time of the day, you can do things in a proportional sense that are pretty much identical with what you do with NQ during the first hour or 2 hours of the European Open. It is zooming right into the microstructure and trading that microstructure. But as I've said, I've got a tool. I've got various tools that I've got in Sierra to help me with this. But one of those tools is that where I've set the risk in whatever points, whether it's automated or fixed. Then I have it such that the quantity that I take is automatically calculated for me so that it meets the risk dollar value that I have set for each and every trade that I'm taking in this session, and that should relate proportionally as a percentage of your total capital. So it doesn't matter to me, that I might be trading for 2 points here rather than 4 points or 6 points, um, because my R because I'm trading the same dollar value risk, I'm still getting the same as if I was taking a 4-point risk and a 4-point target. So the fact that I'm taking a 2-point risk with a 2-point target, it is the same trade to me in terms of my trading business. And that is something that, you'll often, I saw a video the other day talking about home runs and things like that. It's one thing. I'm not looking for a home run. I'm looking for a sustainable trading business that I can do each and every day of the week. And that means that necessarily that I don't get home runs. But I often get people saying, or you'll see videos saying, I made 90% of my profits on this day. And you then have to question it. I mean, that's great. We all have days where we do much better than other days, and that does happen. But if your business revolves around having as a guarantee a day where you make 90% of your money for the month, you've got to question whether that is a truly sustainable trading plan, because what happens if you aren't around that day? You might be sick that day. It might be, now I am not able to trade this hour because I have promised to do this webinar. But I might have taken some good trades. I might have taken some bad trades. I'm just saying that there were some beautiful setups in this session, but I am not trading them, and I won't be trading until the RTH session tonight. So I won't trade until 40 minutes time. But I believe that you can model this around having different size targets. So it doesn't matter whether in a volatile RTH session in an hour we make 10 points if we've taken a 10-point risk, or a 5-point risk. If we get 2R or whatever. The point is that you have multiple repetitions so that you can keep doing the business that is necessary to get the trading results that you want to see. You can equate it to being a taxi driver, because that's probably a very good analogy or a metaphor. You don't want just one ride to the airport that makes 90% of your money for the entire month or the entire week. You'd like to have lots and lots of good rides. And if one of those rides happen to be somebody you take and they suddenly decide they want to go to A, B, C, D, and E, i.e. 5 scales in our terms, that is great, but it's something that you could not have foreseen. I mean, whenever I normally have I think I've got 5 scales in my current automated execution thing that I've developed in Sierra. I am not expecting, in fact, I never expect to get to the 5th scale. If I get to the 5th scale, or if I manage to increase that scale for whatever reason, it's an absolute bonus, but it is not the mainstay of your trading business. The mainstay of your trading business is not losing more than 1R, and that's really what I wanted to talk about in that perspective. Anyway, let us quickly go and have a look at NQ. I haven't really gone back to the RTH Open, but because we've got so many similar types of trades to what we would do at the ETH Open, I don't think there's any need. It's always worth looking at NQ, and again, I say that as I keep saying, when I am actually not presenting a webinar, I've got Bookmap NQ and Bookmap ES pretty much side by side across a thin bezel on two monitors. So I would know that on NQ we tagged right up to this thick liquidity and rejected it. There we go. In fact, we interacted with it and then we rejected it. So you have that beautiful category C trade here. Category C and NQ can be like this at this time of the day. You know, it doesn't look like a true category C because you've got this skinny little shoot up, but that's what happens when they put tremendous um, pushing and selling pressure, tremendous book pressure in the market, and you go through some stops in NQ because it's so thin it can shoot up. But that essentially is still a category C supply and demand. It's a breakout failure. It's smashed above it something and then comes straight back down. So in terms of being able to see it live in real time, you have to account for the fact that one is a lot thinner than the other, so they're going to look a little bit different. And when you've got something like the MBO stop icebergs order, that can help here. You can see that that was 33.6. So in terms of actual stops, it's like a 300 stop. If we took every single one of those orders and we added them up, 173, 48, etc., it's probably about 300 in total. So if you've got 300 orders to fill in NQ, it's going to take a few points because the book is that thin. So that to me is still very similar to a category C at any other time of the day. It's just something that you have to adapt because of where it is. And it was taking out, I think it was, let's have a look. Yeah, it was taking out a thick liquidity level and it hit a few stops. I don't know if they knew they were going to hit those stops there, but they took them out and that got a beautiful reversal. Okay, still no questions. Okay. I'll just check to make sure there are not a lot of people on today. I'm just seeing if there's anything in NQ that's helping us with likely direction. So you've got this thick liquidity, which is at the round number of 15,600, which we kind of ignore, even though it may well get taken out. But you've got two lower levels there at
NQ sell 58 stop.
15,590 and 15,980. And just looking at my 10 seconds, it looks like they might want to flush underneath 15,618 at some point soon. So they might well have a little flush down because they have the momentum at the moment. And if I look across to see if we have any unfinished auctions, we don't, but that doesn't mean that they won't flush it out. Yep, there we go, nice little flush down. When you watch the NQ a lot, you will kind of see behaviors that you see again and again. So there is something that I saw there in Bookmap and also on my 10-second Sierra chart that said to me that it was likely, in fact much more likely than not, that they were going to flush that out. Okay, how are we going on time? It's 8:58, 2 more minutes to go. Let's go back to ES and watch this. So if we zoom out again, we've still got this heavy liquidity above. And if we look at the actual longer term 3-minute chart, have we broken back into value? No, not really. We've held above value. So we're still very, very bullish. And we're back above. Yeah, we're back above yesterday's daily RTH high and the Globex high. So again, even though we had a lovely move down and it was tradable, provided you had setups that were set out in your trading plan and those criteria were met. But even though we had setups to the downside that were tradable, it still looks quite bullish, and should also have been looking at a potential category C long just right there, which is quite nice. So you had a large couple of volume dots there. So quite a lot of volume if you add those up. You're probably well over 1,000. And they took those out. I'll try to see what they were. It's hard. Sometimes you've got to do quite a bit of mental arithmetic in your head. Otherwise, you have to spend too much time zooming in. We took those out. And yeah, that's been a nice retrace of 4.5, 5 points already. 4.5 points probably. Okay. Yeah, final request for any questions because I'm coming up to my last 30 seconds. I wish everybody a good holiday weekend and enjoy your trading and enjoy your session ahead. I will be with you mentally or in spirit, and have a good weekend. I will stop the YouTube stream now.